Hey, John. Hey, Brian. All right, let me get this shared. All right, here we go. Well, one day is Thursday, October 24, 2024. This is the weekend charts. I'm just going to thank all you guys and girls for attending. We have a good crowd tonight. I appreciate you taking time out of your busy schedule. Hello over to you guys and girls over there on YouTube, YouTubes. All right, we can talk about, well, obviously current market conditions, your questions on trading, your favorite stock and crypto. Picks for the methodology in action, pretty much the same as we have been doing lately. I have a mystery chart update, a mystery chart reveal, TFM 10% update, altcoin trade updates, and Landry 100. Earlier this week, I started working on a presentation. I was going to say, hey, IPOs are starting to get hot. John Ross is the resident IPO expert in a Facebook group, and group's been really active lately. And then all of a sudden, the IPOs just kind of tanked, and we'll talk about that. But I think we could be still on the cusp of something here. But I'm a trend follower, so let's just see what happens. I also had a question about stops. I don't want to do a walkthrough, and I think that'll solve a lot of things. And if you have any questions, you can feel free to type them in now. In fact, if you want to start asking about individual stocks, it's okay to type them in now too. There's a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up. All predictions are about the future, and a lot of stuff can happen between now and then. There's my information, and you can also reach me at daviddavelandry.com. All right, let's talk about the mystery charts and the methodology in action. We have a mystery chart reveal this week. This was last week's mystery chart, and it is ZK. As I said last week, it took off sharply. Also, it's an IPO. It has a cup and handle look to it. And this is hopefully, I know I just said hope, a word you should never use in trading, but hopefully this will turn into a great IPO example, and we can talk about this one too. Sometimes IPOs come public and get ahead of themselves, and that's exactly what this one did. And our unwritten rule, actually our written rule, is to not buy an IPO till at least you have 5 days of trading. And you might go long on the close of the fifth day, and I'll show you that in just 1 second. But this took off nicely, and it's made a cup and handle pattern, and also it's a pullback. It's a Landry light pullback too, because you had Landry light, and then it pulls back to the exponential moving average. The entry was there, the stop was there, and the initial profit target is up here. And I'm going to use the word hope again, but hopefully it'll hit that IPT, which is in between where it is now and the old highs. So we'll see what happens there. Also, as IPOs, and I'm going to beat the dead horse a bit on this in a minute, but as IPOs make new closing highs, it's usually a bullish thing for them because everybody who owns the IPO is happy. Now, that unfortunately doesn't always work, and I'll show you where it failed miserably in a second, just to show you the good and the bad. All right. Follow up on the mystery chart, it's CLOV, and that's the original recommendation. It was first recommended on August 28, 2024, 2,000 shares per 100K. And it was a nice uptrend. And one thing I was noticing as I'm going live is notice that we didn't have any downside Landry light this whole time. Landry light is just lows greater than the moving average. In this case, I use a 30 EMA, which has become, in more recent times, my favorite EMA. I know you're a part of me. But I think this is kind of cool and maybe fodder for some research when you stay green, even if you come down and touch the moving average, which is fine, which actually, in some cases, sets up the stock. And in this case, was a Landry light pullback. The other thing, as I said last week or week before, is notice that it accelerated higher. And the other thing, it's like last week at Bandcamp, in general, it tends to persist higher for the most part. And this nice little rip higher it made here was on an acceleration of trend. It was also very persistent. It pulled back. My line's a little off there, but you get the idea. Notice that the Landry light went back down to 0. Entry was here, stop was here, IPT was here. Now, one thing I've been showing with trend following is there's a lot of ups and downs. And sometimes it's hard to hang on through them. And hopefully with the hybrid, is that word again? But hopefully with the, hey, Peter, good to see you. Hopefully with the hybrid money management system, by banking the partial profits, we could mitigate those drawdowns some. And on outright losses, we're only risking 2%. Barring overnight gaps, which I got whacked on one. I'll show you in just 1 second. You tell them kind of pissed. But anyway, it hit the IPT. So at the IPT, you're up 2,000. You bank 1,000 or half the position, and you bring that stop up to break even. Now I'm going kind of quickly because we've gone through this example the past couple of weeks, but at that peak right there, you had $1,000 plus another 1,700 in open profit, 1,710. So that was 3,710. Unfortunately, it's drawn down since, and here's today's spreadsheet of the open portfolio. And this is the model portfolio based on a 100K account. I do take trades in this exact number in one account, the exact number of shares. And I also will take these trades in other accounts too, but I do try to keep a model going so I could show you the actual trade. I think I showed you the actual trade here a few weeks back. And you can get the archives on my website and on youtube.com/Dave Landry. But anyway, since then, you can see we're only up 790 on the second low. So that is a pretty big swing, but it's a much smaller swing had we not taken partial profits. Now, a 1% share size, let me rephrase that. If you go in with 2% on 100K, okay, that's $2,000 just stopped out. And especially with a lower price issue like this, once you get the initial profit target, you still have quite a few shares on. And if this thing really takes off, if this turns into the mother of all bottoms, longer term, this stock is bottomed out, then it could be worth a lot, even though you only have half the shares off. But if you get stopped out, so what? At least you made a little bit of money, barring overnight gaps. All right, I'm not sure. Well, actually, I mentioned this one earlier in Facebook, so I could talk about it tonight. I try not to mention anything. I try not to talk about anything in the webinar that I haven't mentioned. It's been a long day that I haven't mentioned before. So I try to show things, at least like in a webinar, the mystery chart, I'll show that ahead of time. And that usually comes, or probably all the time, comes directly from my trading service. You can get the archives at davelandry.com/archives, and I'll make sure those are fresh on Friday, October 25th. By the way, next week's Halloween. I'm not sure if I'm gonna do a show or not, so stay tuned to that. Probably won't do a show. Anyway, so the intro is here with crypto. Unlike my other trading, sans IPOs, I will buy breakouts on IPOs, and we'll talk about that in a lot of detail in just a minute. But with crypto, especially when quite a few pairs are running, you could actually buy the ones that are making new highs, especially if they're doing it with a little bit of vigor like this. And it's kind of scary. You close your eyes and buy. And don't bet the farm on this. I've got a really small, well, I actually have 3 accounts, but they're really, really, really small. And I'm just having fun with it. And I want to see if I can parlay these accounts. And I also want to see, as I've been saying lately, when I profit from these shit coins, these altcoins, these tokens, these meme coins, and things of that nature, I want to see if I could just peel off a small amount, one at the IPT and sometimes on a spike higher, and just put it into Bitcoin. So it's kind of like my shitcoin to Bitcoin thing. Now I'm hodling the Bitcoin, but there's not a lot of it. It's adding up. It's a few $1,000s that have done collected in doing this. And as I say each week, if that becomes a real dollar figure, then I will probably put a little money management in it. But for now, I'm just seeing if I could make money in these altcoins and then turn around and put a little bit into Bitcoin, kind of mine off a little bit, so to speak. And by the way, I know it's a little, what's the word, crass to call them shit coins, but that reminds me that these things are for trading, okay? They're like sardines, right? Like the old, we'll get to that in just 1 second, but the sardine story where the people were at the end of the wharf and they were trading sardines, and sardines were just getting astronomically high, and some guy bought the high tick, and he goes home with his sardines and decides to open them up and eat lunch, and they're rotten, and he goes find the guy that sold it to him and said, hey, you sold me some rotten sardines. And the guy said, "You silly fool, those sardines are for trading, not eating." So IPOs, stocks, crypto, shitcoins, any financial market, from my perspective, and it should be from your perspective, is for trading, not eating. I'm going to breeze through this TFM 10% system. I know I say this every week, but let me try to get through as quickly as possible. Here's some bands that I set up. The 10% line is the only line that required for the system. That in the 50 simple moving average, and 10% line is just 10% below the 50-week closing high. And my thinking is, if a market is to go to zero or lose half of its value, it's going to lose 10% of its value first. Kind of technical analysis 101. And the 5% band came from Jeff, who is usually here on Thursdays. I think he's here tonight. And he likes to get out when the market slides 5%. And that's fine. He's going to get out a little early, like in this case here, he'd have gotten out here as opposed to my sell signal, which was here. So he'd save some money on that one. But every now and then, like right here, he might get shaken out, and that's called a whipsaw. If you're a good trader, then you could just get right back in and you don't care. Anyway, that's the rules. You just have to be within 10% of the 50-week closing high and above the 50-week simple moving average. And a sell signal is when you close below the 10% line, okay, and the 50-week simple moving average. Now, again, this is a weekly chart. Now, the buy's a little more stringent. You need 2 bars of Landry lights, and you go long on the close. Now, when I designed this, I was using stock charts, S&P 500, for my walkthrough, and went back about 100 years, I think, or so. I have a spreadsheet on this that I occasionally show, and maybe next week I'll dust it off, or a week after. But anyway, going back 100 years, I didn't think about in the testing. I didn't think of it. The point I'm trying to get to, I'm kind of got 3 different thoughts in my head, but one of the main point I'm trying to get to is this is on a calendar basis. So you would get out on a Friday when this occurs, and that's something I didn't really think about, that maybe in a week you could have something here. But for now, and the way I've been following this and tracking it is on a Friday, so it's a weekly closing charts and not a rolling closing chart, or rolling weekly chart, I should say. Anyway, the sell, again, you close below the 50-week moving average, and you close 10% or more away from the 50-week closing high. Notice that moving average is catching up to the 10% line. Once, or if, the moving average surpasses the 10% line, then the 10% line is your sell signal, because it'll be below both the 50 and the 10% line. Anyway, sell's right there, so it's got a ways to go to get to a sell, especially since we just hit new highs. Now, last week I said, notice that the zones are shifting higher because the market made last week new 52-week highs. Unfortunately, so far this week, and I know the week ain't over yet, but so far this week it has not. So you notice that the zone began to flatten out. So you can see it's going sideways in here for 1 week. So we'll see what happens. Now here's the cues. Like I said, I bought 100 shares for S&Gs. Didn't think it would turn into anything, and fortunately it did. And right now you can see, let me just back this out a second, the 10% zone and the 50 simple moving average are right around the same level. So your sell signal again would be right there. Now notice here that it hasn't made new highs in a while, new closing high, that is. So the zone has stayed flat in here. I think it has some arrows that are coming up. Anyway, I marked to market this. So this silly little trade, 100 shares, is worth 17,283, but the drawdowns have been fairly steep, as I've been saying, quite a bit. So that was like a $4,400 drawdown, almost $5,000 or $4,500. And that was like 60 or 70% of the open gain. So that one was a little painful. And technically, on a trigger, a sell trigger, it could have actually went negative after being up whatever it was, $5 grand or whatever it was there. So here's another drawdown, 3,600. This one kind of hurt, $8,000. And again, when I put this on, I'm like, who cares? 100 shares. And then I was, to my surprise, and I'm happy, believe me, it actually turned into some real money. And I'm going to say hope again. Hopefully, we'll bang out some new highs. Those stops will move up, and we'll continue to trend follow this for a long, 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 long time. Notice, like I said, in the P's, a little more prevalent here. Let's see, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 weeks, so 4 months of sideways action. So the zones are not going to change until and unless we bang out some new highs, but we're not that far away. But obviously, you still have to get there. So Landry 100, just real quick, proof of concept. This is not actually traded, although someday I might throw some money at it. And the thing about it is, when conditions are halfway decent like they are now, I know they're mixed, but they're decent enough to where you've got enough momentum still out there. This thing pretty much prints money. When the market gets choppy, it does not. But when the market gets choppy, you get fewer and fewer setups. And I treat cash as an asset class. So some of these slots, or nearly all of these slots, might end up in cash. So it'll be fun to run this through. I know you want to party with me. It'll be fun to run this through a couple of cycles and see what happens. And hopefully we don't have a down cycle for a while. But anyway, the point is that they're all bought at new highs. And I'm not saying rush out and buy new highs, but if you were going to buy a basket of stocks, or if you're buying IPOs, or with a pattern with the IPOs, or if you're buying shitcoins and the shitcoins are all moving, and so is Bitcoin, then by all means, it's okay to buy in at new highs. But it's a really cool thing. And you could see, and one thing I pointed out over the prior weeks, this was bought here, and then it immediately went into a drawdown. So even though everyone was bought at new highs, a lot of times, of course, they go straight into a drawdown. But these numbers here are pretty substantial, and you can see the tracking dates are only going back a couple of months. And this one's up 104%, and this is, I can't read what this is, but the great thing about a momentum list like this is you don't care what sectors they in, or the stocks themselves for that matter. And you're able to be a pure technician. And it's, I know I'm a nerd, but it's fun to run this. I really look forward to running this now. And it's like I said, it's been a blast just going in and finding those stocks. And it's really alerted me to things like utilities are becoming the new semiconductors, or momentum stocks, or biotech, whatever you want to call them. So we could see some setups soon in utilities. REITs had a pretty good run for a while, although I've been pulling a lot of REITs out of this list. But the beauty of it, it does help you to see where the money's flowing. So it's a great exercise, if I say so myself. Watch last week's webinar if you want the formula for that I use for that and 50-day historical volatility, which should give you two. So I just snuck in the sardine story, and that's because we're going to talk about IPOs this week. And John is our resident IPO expert in a Facebook group. John Ross, he's really taken the ball and ran with it. I hope I got the tense right on that when it comes to IPOs. He does a really good job with them, so I'm proud of him, proud to have him in the group. And we've been really active talking about IPOs lately, and quite a few of them taken off. But then it's like all of a sudden it's like they hit the brakes a little bit. So I put together the slide a few days ago, and I'm like, IPOs are heating up again. It's like, or we're heating up. But I think they're going to ebb and flow like everything else. And I think it's important, because I debated half the day of whether or not to talk about IPOs tonight. But I think it's important, even if they all tank tomorrow, what I'm going to show you here is going to be relevant for the next time they take off. Anyway, this is one I did not take. Like I said, I like to take every chart or trade I show you. I did not take this one. I think some people in the group took it. John, do you take this one? So buy it B, super simple pattern. I'm usually not a big fan of IPOs that are lower price like this. Usually $5 is kind of my cutoff. And this one's kind of like, it's right at $5 and change when it triggered, and I decided to pass on it. But it did take off. Now, buy it B, again, you need 5 days, and you're buying at the close of the 5th day or any subsequent day where it closes at a new closing high. So you can see here's the close, and then closes here. day 5, and it also closed it there. Okay, John didn't take WC2. Is there a reason you didn't take it? Was it because it was cheap? Just curious. Now here's one that the guys in the group have been talking about. Day 1, day 2, day 3, day 4, and day 5. So the new closing high was set on day 4. So any close above that would be a buy, and that would have been the buy there. Now, the reason I didn't take this trade is one thing I like to ask myself is what's the story, fad or glory? John said it was for price. Well, you know what? You should be proud of yourself. I should be proud of myself too for not taking it, because in general those lower price ones tend to be a lot more speculative and don't seem to work as well. And that's the thing with trading, is making a decision and then living with it. It's like, of course I'd like to be in that stock right now up 200% or whatever the case may be, but it didn't quite fit because of the price. But anyway, in this case, the range is kind of so-so on this one. It's okay. I like to see a decent range with the buy at B, and I'll show you an example of that in just 1 second, of a narrow range. But also, I like to ask myself, what's the story, fad or glory? Now, I know, hey, Dave, you're confusing the issue with facts. I know. I'm confusing the issue with facts a little bit. But with IPOs, for these pioneer setups, the setups that could trigger on day 5 and trigger early in the life cycle of the IPO, you want some kind of excitement about them. Maybe like a micronuclear reactor, where they have these nuclear reactors they drive around on trucks and can power like half a city or whatever. I don't know if that's an exaggeration, but it's pretty impressive stuff. I don't know how viable it is, but I know that that's going to be a pretty big deal with all the AI and all the crypto mining and all this other stuff out there, these power demands, these energy demands that we have nowadays. So that's exciting, or a biotechnology, or some kind of, I don't know, electric vehicles, just some sort of excitement, as opposed to a kindergarten learning company. I mean, what is that, So I like to ask myself that for the pioneer setups. Now, I will take secondary setups, as I'll show you in just 1 second. By the way, somebody's asked me before, like, is there any areas that you've never really made money on? And I've done a lot of trend testing, mechanical testing over the years, and 2 sectors that I find don't really trend that well is shipping and education. Now, shipping can have some really big moves at times. So as a trader, yeah, you can go in and make some money in shipping. Education, I just have a hard time getting excited about it. Those stocks tend to be really choppy. So it was hard for me to get excited about this one. Now, I might take a secondary setup. Now, by secondary setup, I remember when Academy came public. Now, the range wasn't fantastic. It was a pretty narrow range, so I probably wouldn't have taken the trade based on that. But it did expand shortly thereafter. But it was like hard for me to get excited about this stock. What's the story, fad or glory? It's a brick and mortar retailer, okay? Yeah. But there was a secondary setup, and I'm like, you know what? As a purist, as a technical analysis price purist, and if the pattern is there, and it had all the makings of a decent pattern, it had acceleration of trend, it had a decent move higher, and then it pulls back fairly deeply. You like to trade deeper pullbacks than the IPOs. The first deep retracement is the way to go. So this was recommended in the service, and if you go back to whatever year this was, I guess 2020, you could see when I recommended that trade back in November of 2020. So you can check that out. And it turns out, not that you want to confuse the issue with facts, but it turns out that people were sick of being stuck inside because of this COVID thing, and they went out and bought kayaks and outdoor gears and went out and did things. So that's what's happening today. Hey, we've got to check in for Brazil. That's awesome. Is Estonia in the house? We have, we're going to talk to Maze in a minute. I hope I'm saying your name right. But we'll talk to Maze about stop placement. So that would be Estonia. We got Brazil. That's exciting. And sometimes we have Australia checking in. Anyway, so that was the buy right there on that first deep retracement. Now here's one I'm long, and it's so funny when I came, well, like Tuesday, I was thinking, okay, this week I'm going to show them all the IPOs that I'm long, and it really hadn't materialized just yet, but I'm going to show them now. And when they take off, I'm going to say, you see, I told you. But dude, remember Monty Python? It's just a little rabbit. I told you. Bar 1, bar 2, bar 3, bar 4, and then bar 5. Now, the buy at B would be right any close above this bar, but the problem was the range was compressed. So in other words, it didn't have a big range. You want to see enough range to where you're buying that new high, you know that there's some excitement there to possibly push that stock even higher. What did we talk about last week? Greater fool hunting. Okay, if you have the range there, there's a chance that there could be some greater fools in the wings. Okay. So again, new closing high was here. So any close above that technically would be a buy, but I didn't like the range. But what was kind of cool is when I was looking at it, doing my analysis late in the day, I'm like, well, you know what? This thing has an expansion of range. And I'm trying to think if it was this one or not. I'll be happy to confirm for you. But I think I might have even bought this one in after hours because it was a setup and there was an expansion of range. Yeah, in fact, I'm pretty sure because it was a Friday afternoon. Anyway, it has not worked yet. So let's just see what happens. So again, the original buy would have been any close above that. If it had closed modestly above that, let's say 24 or even 24.50 or so, I probably would have left it alone, but it had an expansion of range. And that's something that I didn't think about when I originally did the IPO course, what happens when you have a expansion of range on a trigger. So that's one that you might not have thought about buying until you actually see the trigger on the signal. So here's another one I'm long, bar 1, bar 2, bar 3, bar 4, and bar 5. Now, the new closing high is right here, but we have the day 1 rule, which means that it must close at a new closing high and above the first bar of trading if that bar sets the high for the week. So if this is the high for the week and then these bars are lower, okay, then it has to close above the day 1 high. Now, if any bar takes out that day 1 high, that rule is no longer in effect. And we've got plenty of videos on this, so just check the YouTube channel and check my website. Okay, this one was kind of a little funky, but I went with it anyway. And I'm not too happy that I did, but we'll get to that. Bar 1, bar 2, bar 3, bar 4, and bar 5. Once again, here we have a case where the high for the first week was set on day 1. So what happens when that happens? You have to close above that day 1 high. Let me check on YouTube here real quick. Hi guys, any questions? Okay. So again, there's the new closing high was where? Was right there, but because the high was set on day 1, you also have to close above the day 1 high. So I bought it, and so you believe me that I actually bought it. Look, there's 1,000 shares right there. See, I'm doing what I say I do. And this is what happened today. Not that I care about news, but I couldn't find any news on it, so I find that interesting that it lost like 80% of its value with no news. And of course I said, mother father. Well, I just showed you that shit happens, huh? So any speculative market is dangerous. One thing we discussed earlier in the week in Facebook is that, as I often preach, I like to trade more volatile stocks within reason. And that's because it's better the devil you know, and you adjust your share size down accordingly, okay? So I'm going to screensaver working here. With a less volatile share stock, with a less volatile stock, you'll need a wider stop, S-T-O-P. I'm sorry, just the opposite. Let me rewind that. With a less volatile stock, you could use a tighter stop, but you're going to have to buy more shares to make it worthwhile. And something bad can always happen. And then the debacle du jour we saw this week was McDonald's, obviously. Or as the old folks call it, McDonald's. This is curb. Now, one thing that's a little tricky, and the map is not the territory, as I often preach. A lot of people say, what do you mean by the map is not the territory? Well, I can show you something, but when you go to do it, sometimes you find out that it's a little bit different in real life. In this particular case, this stock was showing some trading that happened before it actually came public on a couple of platforms. And sometimes these platforms get their data from the same place. But it seems like the real IPO was on October 1st with this one, okay? So bar 1, bar 2, bar 3, bar 4, okay? And then this one triggered on bar 5. It had okay range, not huge range, but okay. It ran from what, 19 to 24. It's like a 25%, 30% range. That's okay. So the buy would be on that day there. Now, and I apologize if I have the name wrong. Mays was saying that this is Estonia checking in, that he bought it at 23.83, and he had asked earlier about a stop, and I said, yeah, a 2-point stop would probably be adequate for something like this. And then he was asking about stop placement. So he said that his trigger, he went long at 23.83, stop at 21.83, 2 points below his entry. And then when it hit the high, he raised his stop to 22.83. He raised the stop a point. And then it closed at 24 that day, and then he stopped out at a loss, at about a 1-point loss. So his entry was here. His original stop was down here. So that's 2 points. Now, when it made this intraday high, he brought his stop up a point, and then he got stopped out. Now, without picking apart what he did, let me go through the money management real quick. You want to put on 100% of the intended position all at once. Okay, so we're not scaling in. If we're going in with 100 shares, we buy 100 shares all at once. We're going to 1,000 shares, we buy 1,000 shares all at once. And then we look to flip out. I think we had 2,000 shares of that clove, if memory serves. So we sold what? We sold half at the initial profit target. So the official buy bid on this one was on that day. So you would buy on that day. By the way, what's the story of Fat of Glory? This is a REIT. You know, it's kind of, I know REITs have, I know I just said that REITs are becoming more of the momentum stocks now, and maybe they will because the real estate seems to be going through the roof. But in a case like this, it's kind of like the Academy. I would wait for that first pullback, which we're having now. I'd actually like to see a slightly deeper pullback on this one, and then I might consider it as a secondary type of setup. But if I'm going to get in a pioneer setup, meaning getting in early on an IPO, I'd like to see some sort of enthusiasm, which is my second favorite ASM, by the way. In case you were wondering, my number 1 favorite ASM would be sarcasm, of course. Anyway, you put on 100% of the position, and as a general statement, you want to raise your protective stop on a 1-for-1 closing basis. So if it goes up a 0.5 point, then you bring up the stop a 0.5 point. That's before your initial profit target is hit. What I have done in more recent years, I'm slightly more lenient on that first tranche or loaf, however you want to look at it, where if it goes up just a few cents, I'm not going to bring that stop up a few cents. But if it goes up a point, I'll probably bring it up a point below. But on other days when it just goes up a few cents here and there, I'll play that keep the change game that we do with the longer term trend following, where if it goes up just a little bit, we'll just leave our stop where it is, thereby letting it widen out. But as a general statement, the official rules or a one-for-one basis when you first get into position. So if it closes 1 point higher, again, you bring up that stop 1 point from where you started. And again, I've become a little bit more lenient in recent times. And the more lenient you are with your stops, by the way, the better your chances are of catching a trend. But obviously, when it doesn't work, the more money you lose when it doesn't work. Now, when, or if, I should say, the initial profit target is hit, you want to immediately sell half of your shares, okay? And then you want to bring your stop up to break even intraday. So what Mays did was he, on that spike higher, he brought his stop up, okay? And we're only adjusting stops on a closing basis because we're longer term, well, we hope to be longer term trend followers. Yeah, we're shorter term traders when we get into the trade, but we want to stick with position for years and years and years and years. And occasionally we're able to do that. So we're not really worried about the intraday zigs and zags. And the problem with that, if you do adjust your stops on the intraday zigs and zags, what'll probably happen, which happened to this gentleman, was that he got stopped out. And that's one thing you got to be careful. You can't really put an automated trailing stop in unless you're looking to take profits, because a spike up will spike your stop up and then you'll likely get stopped out. So you see right here, we have a little bit of a, I'm getting some love on Facebook. I've never got any love on YouTube. So right here, you can see he got in right here, okay, day 6, and then we have a higher close. So you would take the distance from his entry to this close, and that's how far you would bring that stop up, okay? You would bring it up a like amount. Now, the next day, if it goes up, let's say a half a point, you bring this up a half a point and keep doing that, okay? Unless you're stopped out or you hit the IPT. Now, let's assume for argument purposes that the IPT was up here and then the stock rallied to the IPT. Now, when that happens, you immediately bring your stop up to break even. And the idea there is to free roll, so to speak, and hopefully stay with the position for a long, long time. Same thing I do with crypto with a 20% IPT. So what was that one I showed earlier? ACX, I think. If that one keeps on keeping on, then we'll take initial profits. We'll get our stop to break even, and we'll set it for hopefully a long, long, long time. So he had a 2-point stop. And again, I don't know why this is doing, okay, there it is. All right, any questions on all that? We're going to jump into crypto. And if there's any questions or anything, please let me know. I'll check in with YouTube here. We're good over there. Okay, so let's go to crypto. There we go. So anyway, this one I bought, again, because it was going up. I think we talked about this one in a couple of webinars. This one was a little crazy, but it was shooting higher. I think it was on this day here that pulled back a little bit. I bought it here, and we're flipping out at a 20% IPT. DIA, I think we talked about in the webinar last week, took off, and then again 20%. And remember, barring overnight gaps again, of course, it's going to be harder for these guys to gap because they're open 24/7, but you know, things can happen, okay? Then the worst you could do is break even on the remainder, and then again, hate to use the word hope, but hopefully ride them out for a long, 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 long time. This is a meme coin. Let's see if we can get a reset. There you go. You can see it just kind of pulled back in here, and I saw it earlier today. Looked pretty cool, so I went after it. And there's the ACX again. You can see just kind of breaking out in here. And again, I'm not usually a breakout trader, except for IPOs and occasionally these shit coins. Let's take a look at the big daddy here, Bitcoin. I was looking at this earlier. I'm like, look at the Landry light happening. That's looking pretty cool there. and nice little pullback. So on a short-term basis, Bitcoin looks fantastic. As I would say quite a bit though, we have all this overhead supply and we've gotten through a lot of it, okay? But for me to get super duper excited about Bitcoin and actually buy it, it would have to get above 72,000 and stay there. I'm not going to necessarily buy the breakout, but if it gets up there, it starts pulling back. I think last webinar I said, I remember when I bought Bitcoin once, I'd been buying it like much lower prices. And I remember one time when I bought it at 18,000, I just thought I was the biggest idiot in idiot town buying something that's nothing, you know. But it's now 70,000 seems kind of normal for it. I do think this market is going to mature. I was talking with a gentleman earlier today in the gym, explaining to him that you've got a lot of paper Bitcoin out there, you've got a lot of derivatives, and so people aren't necessarily buying Bitcoin, they're betting on Bitcoin, okay? Whereas if it was more of a pure market, then I think it could, the lid could be pulled off a lot easier. And it is going to mature to where it becomes less and less efficient over time. Or sorry, more and more efficient over time, meaning that it won't have these amazing moves like we've seen in the past. But let's just see, there is a limited supply, and I know I'm confusing the issue with facts. Anyway, Ethereum has really been lagging for a while. And I guess the Michael Saylors of the world would say that Bitcoin is more of a currency, and Ethereum and some of these other ones are applications, okay? So that's an interesting way of kind of looking at it. So I guess Ethereum is more of an application. You could use it as money too, I suppose. Anyway, Ethereum is just kind of wide and loose and sideways. Certainly nothing to get excited about there at the present time. Let's take a look. Well, let's sort these out, okay? And let's just take a look at some of these strong ones. Okay, this one's up 41%, but looks like it's already shot higher and it's come back in. So nothing exciting there. Same thing with that one. This one looks a little thin. When you see these long tails, usually that's pretty thin. Obviously, you can confirm that with your brokerage. This one's okay, a little wide and loose. It's trying to break out. But the good news is, and look, this one's kind of going straight up, okay? So this is one that I may have taken had I seen this one. So I need to get back on my analysis and stay on top of them. That one looks okay. It's trying to break out. There's some tails here. I would check to see if that's super thin. That one looks thin. But the good news is these are improving. That's one that's been on my watch list a little bit. You can see it's begun to take off. And kind of sometimes they have this IPO characteristic to them. Now the thing is it really a new issue because Coinbase picked it up? So if somebody could figure out how to find the new tokens, there might be something there. But new tokens, as soon as they hit the exchange, that is, because I guess there's a lot of them out there that aren't traded. And again, there's that little meme coin I talked about earlier. It's kind of a breaking away from the 30, and it's had a nice little pullback. ETH, I don't know what that is. Ethereum wrap something. That's kind of interesting though. What is ETHW? You can see it's kind of sideways, but it's trying to move higher. So anyway, sometimes you could just come in here, as I say, ad nauseum, and buy the ones that are breaking higher. Oh, there you go. Oh, look, I'm long that one. So that was not a setup. So like you saw how I stopped on that one, got kind of excited. That's always a good feeling. Was like, okay, wait a minute, that might be something right there because it's taken off. All right, let's. Any questions on the crypto? Is there anyone you want me to look at? Yeah, John, I believe you on that. We'll talk about that in 1 second. John's talking about the Rusty. Yeah, I made fun of my little friend in the gym, and because he bailed on a Rusty at break even, but so far he's looking pretty smart. Okay, let's do this. Let's take a look at the indices, and then we'll drill down to some sector action. Okay, S&P 500. And if you have any individual stocks you want me to take a look at, I'll be happy to do that. Start punching them in now. S&P 500 still looks pretty darn good, okay? You back the chart way out, and boy, it looks like it's going straight up, huh? Look at that 200-day moving average. I feel like Tiny Elvis. Their 200-day moving average is huge, okay? And there's your 50. 50's not too shabby either. And we were chopping around in here a little bit, but we broke out nicely. And yesterday's move is a bit of a TKO, a trend knockout-ish type of move. As long as we don't drop back into this little base that it broke out of, I think we're okay. And we're just off an all-time high. So I would give the S&P 500 for now the benefits of the doubt. Now, NASDAQ doesn't look quite as good. You can see that it did stall shy of its prior highs in here. I'd feel a lot better if it made new highs and stayed there. But you know, between one day at a time, it had a bit of a knockout move yesterday. I'd like to see this one at least make new highs. And it's likely, as I discussed last week, talking about when a market goes back to its old highs, those who got in, the Johnny-come-latelys who got in at the last tick on the high tick, right? They're looking to get out at break even. So I'd like to see that action happen. And maybe we're seeing a little bit of that last couple of days, okay, or at least yesterday, because we did approach those highs and now we're seeing some selling. And people tend to sell stocks on the way up and not on the way down. Now, eventually they'll sell on the way down, and that's when the market just kind of cascades lower. But for the most part, they'll hang on as it goes down and sell as it goes up. And, you know, there's nothing new under the sun. Livermore wrote about that over 100 years ago. Let's take a look at the Rusty, and let's see what John's saying about the Rusty. John says, I think we need a good trend in the Rusty for the IPOs to really get going. You know, you might be onto something there. That's brilliant. Yeah. Interesting. That might be kind of fun. I know you want to party with me. Go back and look at what the IPOs do when the Rusty is trending. The only thing about that kind of analysis, and again, the map is not the territory. You go into this analysis, you're like, oh my God, this is a wonderful thing. You know, only buy IPOs and Russell's above the 50 or above the 200 or whatever at all-time highs or near all-time highs within 10% or whatever. And you look at all the IPOs and they're just doing unbelievably amazing when that happens. And you go in and try to do it, and it doesn't work as well. And you're like, what the hell? Well, the reason is you would need a survivor database. You would need to see those stocks that got delisted. So that's one of the little caveats when you're doing that type of research. I've seen a lot of things happen with research. Like I've said 1,000 times, I was hired to be the technician for a hedge fund that was going to do this system. It was an existing hedge fund doing something else, and some third party came in and hired the both of us because he had developed a system. And the system was, one of the rules was you would buy if the moving average turned up, and he was using the exponential moving average, which everybody I think now knows. I didn't know until Greg told me, Greg Morris. But an exponential moving average will turn up the day the price crosses above it. So there was some conceptual correct thought process or whatever to his thought process. Unfortunately, we were seeing the moving average would turn like what Friday's price was here, okay? And then you couldn't see Monday's price, but the moving average was here, okay? So you're like, okay, we're gonna buy on Monday, but that moving average only was up because it was up on Monday. The price was up on Monday, and it was just connecting the dots between on the charts. So we had foresights in the system, which you would not have in real markets. Again, there's another example of the map is not the territory. So that's the story I'm going to retell. Some eyes are rolling here, I could tell. That's a story I'm going to retell next time somebody asks me to explain what do you mean by the map is not the territory. One thing I've been preaching about a lot lately is we've been really mixed out there. Gold, the commodity, hanging in there, had an okay day just off of these all-time highs. Gold stocks have been a little bit of a different story. They've been kind of wide and loose and all over the place. They did break out nicely recently. I'd be concerned if we continue to break down. Most of this, or a lot of this, is because NEM got whacked today, as you could see. So that's a pretty ugly chart there. So we could see some setups in gold. I'm not holding my breath just yet. I'm letting the market come to me. If I see some If some come along, then by all means, we'll go after them. Sorry about that. I ran out of water. Now, back to the downside. Take a look at biotech. You got a triple top working vis-a-vis the IBB. We're right here at multi-month low, so that's starting to look a little ugly. I would obviously avoid biotech, but if you take a look at like software, if I could find it, ILV, I'll just punch it in. I think it's ILV. Nope. Well, you take a look at sectors within software, such as hack, you can see it looks pretty good. So far, it's broken out nicely, just beginning to pull back. Take a look at, there's the software, IGV, you can see a bit of a TKO move yesterday, but look how we recovered all of that, pretty much all of that TKO move. So a little bit of a pullback there. So that's looking pretty good. Nice little breakout from this wide and loose base. Defense, with all the wars and shit going on, I know, just confused issue with facts, but defense has been on a pretty good run. And it's pulled back a little bit, as you can see, but that looks pretty good. So we should be seeing setups here fairly soon. Jets have been doing okay. I just can't get excited about airlines. My system here is to wait till they rally and then short them. Banks are a bit of a bummer. They broke out and they came back in a little bit. As you can see, a little wide and loose. They look okay, but again, I wouldn't get too excited about those guys. Lithium looks pretty good. It's been on fire as of late. It's going straight up. It needed a correction. It had the mother ball correction, so lithium could be okay. The only problem I'm seeing with stocks here is a lot of them have a lot of overhead supply, which is no shocker because look at all this trading in the underlying commodity here. So we'll have to pay attention to that. Let's take a look at the semis, getting back to the kind of mixed columns. SMH kind of has a bigger picture retrace look to it, and at the least, it's wide and loose and all over the place. Could you wish Mr. Viana a happy birthday? V-I-A-N-A. I don't know, Mr. Viana. Let me think about that. Anybody here name that? Happy birthday. Okay, semiconductors, yeah, just stalling short of their prior highs in here, a bigger picture retrace. So let's wait for these guys to get going before getting too excited. NVIDIA was kind of cool the other day because it broke out to all-time highs, and now it's pulling back just a little. We might be seeing a little double top action in here, like I just said, people selling on the way up. Oil service, choppy downtrend, as you can see. So the point I'm making is it's still really mixed out there. Palladium kind of waking up. Not sure we'll see any stocks here, but that's kind of interesting. That caught my eye tonight. Major drugs still look like they're in trouble. In fact, they accelerated lower today. They bow tied to, this is kind of like a gatekeeper back here type of pattern, or a micro first thrust, however you want to look at it. This was a bow tie and a bigger picture first thrust right here, and so far they sold off pretty hard. Looks like they want to come down here and test that 200-day moving average. Can you short that PPH? Does anybody know? It looks kind of thin. Might be hard to short. Probably hard to short. Q's like the NASDAQ, stalling shy of the prior high, so that's a bit of a bummer. So the point I'm making is it's mixed. Depends on where you look, on what you see, obviously. Take a look at financials. They look pretty good. They broke out nicely, and so far just kind of pulling back a little bit in here. So that's the story. It's mixed. And what do you want to do when it's mixed is obviously focus on the stronger stocks. Now, if you're on my service, a lot of what I've been saying lately is don't do anything, okay? So you saw the last two setups, CLOV, and what was the other one that we just showed? What were we just talking about? ZK. I knew it would come to me. All right, individual stocks. Keith wants to take a look at, let me just shift this back over to a blank chart. Oops. And bring this back in. So Keith wants to take a look at OR. He says the gold stock. All right, that's Oregon, right? Or, nope. Yeah, that looks good. It needs a little bit more knockout, okay? Yeah, that looks pretty good, Keith. This is a TKO type of bar, but this thing's kind of going straight up, so it needs a little bit more knockout. The HV is a little low on it, believe it or not. Usually you want to see, lately I like HV to be above 25 and ideally above 30 or more. I'm not sure I traded a stock below 30 in a long time, but this is a good looking stock, I would say, and it's had a pretty decent rally. So yeah, a little bit more knockout move. It can be wide and loose, but it is a gold stock, so that's what it is, you know. Would I be correct in saying that Rusty triggered a TFM buy in December 2023 and no sell signal since? I think you are correct. If I could get, I don't know if I could do it quickly, but let me see if I could pull up last week's slides. Maybe I can do it quicker than I thought. Yeah, let's see what happened. Because last week, remember, we talked a lot about the Rusty. And let's see. Yeah, here it is. Okay, let me just go over here. Different skits about this. Let me get my screen shared. So yeah, take a look at okay, triggered. This was the slide from last week. Okay, would I be correct to say the Rusty triggered a TFM buy in December 2023 and no sell signal since? Well, no, I think we've had sell signals. I don't think that's, yeah, well, 2023. Okay. Oh, that's a different chart altogether. We could do that. Absolutely. Let's go back to here. And while we're doing this, we're going to wrap it up here in just a few minutes. So if there's anything you want to discuss, any stocks, let's get them in now. Okay, let's take a look at, let's go to stock charts. Okay. So if anybody wants these zones and you have stock charts ACP, just let me know. I'll be happy to share them with you. So I just come down here and click on this, the zones. Oops, that's not the one I wanted. This is the one I wanted. So there's the spiders with the TFM. Let's put in the Rusty. Okay. Yeah, good eye, John. Let's see. Okay. Yeah, good. I do not to doubt you. Okay, bar one, bar two. Okay, your buy was right here, right there. Okay, and it hadn't set the world on fire, but you'd be above water in the position. And let's take a look at. Remember last week, and I just had the slide up, but the point I was making, it would be a lot choppy in the Russell, but I think it would still work, the TFM 10% system. And the reason it would work would be that you would occasionally capture a decent trend. So what's this? 220, let's see, 225, round numbers, 219, let's say 220 minus 194 divided by 194. Yeah, so you'd be up 13.5% in the Russell on that last signal. So that's better than the poke in the eye. And here's the good news. So 194.55 would have been your entry, okay? And then 203-ish, let's just say 203 would be your stop. So guess what? You're 8 points ahead, even if you're stopped out. So it worked out pretty good. But you can get some whipsaw, like let's see right here, bar one, bar two. Nope. That's one thing that amazed me, by the way, and I talked about this a little bit last week, and especially with like the 30 EMA, something like the 220 EMA breakout system, and I'm saying 220 in case you want to Google it or find it on my website, which I now call a 230 EMA breakout system because these are 30 EMA. But this is the same sort of thought process. We're using 2 bars of Landry light, okay? But you could see, let's see, bar one, bar two. Actually, technically, you would have bought on this bar here, but it never did. The point I was going to make is if you use like a 220 EMA system or 230 EMA system, every now and then, especially like Bitcoin, it'll go into this sideways chop where buy signal never triggers, sell signal never triggers, buy signal never triggers, and it'll do that over and over again. And that's pretty cool. But with this system, I'd forgotten that you would actually buy here, but you can see you get stopped out here. So that would have been a losing trade. And then you've gotten back in on this bar here and then stopped out here. So that'd have been a losing trade. So you'd have 2 losers in a row, and then you'd have 1 winner, and you'd be long since, as John pointed out, let's see, 1, 2, since December 11th, 2023. So you'd have been long all year. And, you know, knock on wood, let's hope we make it to the end of the year without sell signal to Rusty. Okay, any more going once? Let me check out my YouTube peeps. Okay. Well, obviously, I want to thank all you guys and girls for attending. Next week's probably up in the air. I need to see what's happening. Probably gonna hang out and give some candy out to the kiddos. Any other interesting questions? Landry.com. Everybody have a great weekend. I will see most everybody here is in the groups. I'll see most of you guys tomorrow. Okay, hello. All right, squeeze one in last minute. Let's just let's do that. Okay, hello. I may be long. I think I'm long this stock, and you can check the Facebook group to see. And it was one of those things where I had a small account and I just wanted to be long just because it was going up. Okay. Yeah, that looks good. And that's another one of those. So see, this is where our utilities are becoming a new momentum, right? And this is something that the Landry 100 will help to flesh out. But yeah, it needs a little more pullback. Okay, I have a few shares, so I don't want it to pull back. But yeah, for me this to be set up, it'd have to pull back a little bit. CIA, I forget that YouTube is delayed. Yeah, that looks pretty good. Except there's one glaring problem. One, the volume's a little light. That's not the glaring problem. The glaring problem is all this trading back here. Okay, so you've got all this overhead supply. But the setup itself looks pretty good. So good eye on that. You accelerate it higher, and then you pull back fairly deeply. But you've got so much overhead supply, I would pass on that one, Arthur. But good job as far as picking a good-looking stock, but always back your chart out a little bit. When you get excited, when you see something like this, always back the chart out a little bit and see what's happening. All right. I'm going to go ahead and wrap things up. Again, thanks, everyone, and may the trend be with you. You're welcome.